Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong area of historical support and demand. In fact, from here, all this previous rejection to the upside was created again here, and we can see how multiple times in the past the market tested its zone and created rejections to the upside away from the area. In many occasions, actually massive rejections to the upside. And what we can see is that at the moment the market is testing the same zone, has already started rejecting it to the upside. So in a situation like this, we could expect more bullish continuation to be created, as the market has already done in the past every time that it tested the level. If we zoom in into the most recent price action, so essentially looking at the market in this area here and looking at what kind of structure the market has been creating, what we can notice is that the market has been creating an inverted head and shoulders inside of this area. First, we had the left shoulder here, then we had the head here, and now the market is trying to create the right shoulder here. Now, the creation of a head and shoulder, in this case, inverted head and shoulder, the last move is simply an impulse correction, an impulse pattern to the upside. In fact, we have the impulse correction and the market is already trying to create the continuation to the upside. Now, when you have an impulse and a correction, if you want to measure the correction, as usual, we have to take our Fibonacci from the low to the high of the impulse leg. And what we can see is that the market went and tested exactly that 0.618 Fibonacci retracement before then starting this rejection to the upside. Now, in this case, the 0.618 was lining up perfectly with this previous support, therefore creating a confluence of support inside of this level, which once again, you would expect the market to reject to the upside. So here on the monthly, everything seems quite bullish, and inside of this confluence of support, we could expect to see more institutional longing, which at that point would increase the probabilities of a potential push higher. Dropping down on the weekly, what do we have? Now, from a weekly perspective, we did have the creation of this M pattern, and from here, the market has already completed the M pattern at the neckline, so the previous support turned resistance. Then it rejected the neckline, and now it is trying once again to push above the neckline and break above it. So from a weekly perspective, the only thing that we have to keep in mind is that this area is in fact resistance from a weekly perspective. So at the moment, the monthly is bullish, the weekly is bullish, but has resistance at this level. That needs to be broken to the upside in order for the market to potentially continue higher. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, at the moment, what we can notice is that we had the creation of this M pattern also here on the daily, and the market has now already completed the pattern with the test here at the neckline. Now, in a situation like this area, again, is resistance also here on the daily. So until the market will remain below this resistance on the daily and below the resistance on the weekly, this market can easily continue lower. But in this case, the only thing that would be interesting is to see a potential break above all the structure, because the best probabilities come when all the directional time frames, so monthly, weekly, and daily, are all showing the same direction. And since the monthly is bullish, that would only happen if also here on the daily and on the weekly, we see a break break above the resistance, because what we know is that previous resistance, once it gets broken to the upside, becomes support. So if we will see a break above the resistance after a break on the retest of the previous resistance turn support, this is where we have good probabilities of getting more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the euro, the first thing that we have to keep in mind is that if we're looking at the data for the euro, we're actually already looking at EURUSD, because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from having 52.8k net positions up to 74.4k net positions. So institutions are once again moving back to the bullish side for EURUSD, therefore making it stronger. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find here on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Keeping in mind that institutions are increasing their net positions and moving back to the technical side of the market, as I was saying, until the market will remain below this resistance, it can easily continue lower. However, things would get interesting if we get a break above, because if we get the break on the retest, this is where we have good probabilities of seeing even more institutional longing, further increasing the probabilities of a potential push higher. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in the description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.